Yo, what is up, guys? This is Connor from the Mountaineer Trading Group, back with another video. Now today, I'm going to teach you guys our exclusive price action trading strategy that our premium members have used to scalp the crypto market and make consistent profits each and every day. Now this strategy doesn't use any indicators at all. Basically, we're only looking at candlesticks. And in this video, I'm going to show you guys step by step how we identify these trades, how we get in, how we get out, how we manage our risk and our stop loss. You are not going to want to miss this. Now, before we get started, if you guys are interested in learning how to trade crypto for a living and do this as your full-time job, and you want to stop losing money and learn to trade the right way, then you're going to want to join our premium community full of like-minded traders who are dedicated to helping each other grow. Our premium community is designed specifically to help you overcome common obstacles, solve complex problems, and give you the tools and the methodology you need to become a consistently profitable professional. If you're interested in joining, hit that link below. All right, now let's get into the good stuff. So here is an example of how we want to go long in the market and all of the rules that are required before we enter a trade. Because the way this strategy works is it's all rule-based. We have rules one after another that need to be met before we want to place an entry in the market. Otherwise, we want to look for other opportunities. And this helps remove a lot of the discretion and guesswork out of trading. So first things first, we want to see a strong uptrend. We want to see a big move to the upside that has big green candles. We want to see price be broken, structure be broken, and we want to see a big move to the upside that's very impressive, okay? Now, after we have this strong uptrend, we want to see a weak downtrend. This weak downtrend should take about twice as long in time than the strong uptrend took. And we want to see this weak downtrend only retrace 50 to 60% of the distance in price that the strong uptrend took. So in this example, as you can see here, this uptrend took about 3 hours in time, and this downtrend took about 6 hours in time. And price retraced about 60% of the uptrend. Perfect. Once we have those criteria met, we want to identify where we are on the weak downtrend. We want to identify what our most recent high is and where our current most recent low is. As you can see, I've marked that here on this chart. Here's our most recent high, and here's our most recent low. Now we want to see an impulsive break of the most recent high that has at least 2 candles. Now, the second candle doesn't have to close higher than the high of the first candle, but it does have to make a higher high than the first candle made. And we'll get into another live example after this, where I'll show you that. But as you can see, we have a 2+ candle break of the most recent high. Once we have that, we have all of the entry criteria that we need to tell us we're ready to enter into this trade. So where do we enter and where do we exit? Quite simply, our entry price is going to be at that most recent high that was broken, and our stop loss is going to be at that most recent low. Now, why is that? Because more often than not, price is going to come back down and retest this area, retest that resistance, and it's going to become support. Now, if price were to come back down here and break this most recent low, then more often than not, price isn't going to continue to the upside. Now, we like to target 2 times the risk. And what a lot of our traders do is they like to trail their stop loss up. As price makes higher highs and higher lows, they will trail their stop loss under the most recent low. In this example, if you wanted, you could either set a fixed take profit at 2 times the risk, or you can trail your stop. So as price broke this high here, we would put our stop loss under there, immediately reducing our risk. Once this high is broken right here, we would put our stop loss here, locking in a little bit of profit. As this high gets broken here, we would put our stop loss here, locking in a little bit more profit. So you don't have to have a fixed take profit. You can just keep trailing your stop loss under each most recent low, and eventually you'll get stopped out in profit. Perfect. Let's go on to a short example now. It's going to be the complete opposite of the long entry. So first things first, we're looking for a strong downtrend. We want to see big red candles. That's an impressive move to the downside. We want to see structure broken, and we want to see big red candles. We got that. What's next? We want to see a weak uptrend that takes about twice as long in time and only retraces price about 50 to 60%. We have that here. So you can see this strong downtrend took about an hour and a half in time, and this weak uptrend took about 2.5 hours in time. And price has only retraced about 50 to 60% of the distance that the strong downtrend took. Perfect. Those entry criteria are met. Now what we need to do is we need to identify what is our current most recent high and what is our current most recent low. As you can see, I have that marked here. Most recent high. We work our way backwards. This would be our most recent low because it has two higher candles on either side of it. Perfect. So now before we enter, we want to see a break of this most recent low that has at least two candles. Now the second candle does not need to close lower than the first candle. It just needs to make a lower low than that first candle made. As you can see, we have that here. So now we have all of the entry criteria met to enter this short position. So where are we going to get in and where are we going to get out? Quite simply, our entry price is going to be at that most recent low that was broken, and our stop loss is going to be at the most recent high. Now if you want, you can either set a fixed 2 times take profit. So you're going to, if we're right on this trade, we're going to make 2 times what we risk. Or what some traders like to do is they like to trail their stop loss at the most recent high as new most recent lows are broken. So this would be our new most recent low, new most recent high. As this most recent low gets broken, we would trail our stop loss here. As this low gets broken, we put our stop loss here. As this low gets broken, we put our stop loss here. And if you want, you can keep trailing your stop loss as the trend progresses to the downside. And eventually you're going to get stopped out, but you're going to get stopped out in profit. Beautiful, right? Let's get into a live example. Okay, so we have the Mana USD chart open here. And first off, what do we see? Very obvious, we have this very strong uptrend. Previous price action was a bunch of tiny candles in this sideways range. Then all of a sudden, out of the blue, giant green candles. Huge move to the upside. Out of the blue. Perfect. That's the first thing we're looking for. So the next thing we're looking for is we want to see a weak downtrend that takes about twice as long in time that the strong uptrend took and only retraces about 50 to 60% of the price that that strong uptrend took. So let's measure and see what we get here. So how long in time did this strong uptrend take? About 13 candles, an hour and 5 minutes. Okay. So where are we at in this weak downtrend? About 32 candles and 2 hours and 40 minutes. So this downtrend has already taken more than twice the time that that strong uptrend took. So what does that tell us? So the reason behind all of this is you can see we have a sideways range here, then all of a sudden out of the blue, very strong uptrend. Now that strong uptrend is followed by this weak downtrend that is taking about twice as long in time that that strong uptrend took. So more likely than not, price is going to continue to the upside. So how far have we retraced in price? Well, if you want, you can stick the Fibonacci tool on there, or you can just eyeball it. But as you can see, we just wicked down to the 50% mark. So this weak downtrend has confirmed our first several rules of this trade. We have a strong uptrend, weak downtrend that has taken twice as long in time and has retraced about 50% of the distance in price that that strong uptrend took. Perfect. So what do we do next? Well, we need to identify where in this downtrend is our current most recent low and then our current most recent high. So in an uptrend, in a long, you want to identify first where your current most recent low is. We'll go ahead and mark where our current most recent low is with a low. Now you want to work your way backwards until you see a candle that makes a high and has 2 lower candles on either side of it. That would be this candle here. So we're going to mark that as our current most recent high. Boom, most recent high. So what do we want to see next here? We want to see a break of the most recent high that has at least 2 candles. Now the second candle does not have to close higher than the high of the first candle, but it does have to make a higher high than the first candle. Let me show you what I mean. Let's fast forward time and see what we get here. Okay, so we have one candle that has broken the most recent high. What's the next candle look like? Okay, as you can see here, the second candle made a higher high than the high of the first candle, but it closed lower than the high of the first candle. That's perfect. That's all we need. So we have a 2 candle break of the most recent high. So now we have all of the entry criteria for this trade met. We are ready to get into this trade. So where do we get in and where do we get out? Well, simply our entry price is going to be at that high of the most at the high, and our stop loss is going to be at the low. And we're going to target 2 times the risk. Perfect. Now, in this example, as you can see, price is currently lower than what our entry price would be. So we would want to go ahead and enter with a market position. That way we can get in right away. Now, if this candle did not close higher than the high, did not close lower than this high, and let's say it closed up here, then we would set a buy limit order and we would wait for price to come back down and tag us into the trade before we would enter. Right? So we would have this pending limit order here and we would wait for price to come back down and tag us in. But in this example, we're going to go ahead and enter with a market order. And then we're going to target 2 times the risk. So let's fast forward time and see what we get here. Boom. Profitable trade. That's a winner. It's as simple as that. This is the strategy that I love to use to trade each and every day in the crypto market. Now, these entries don't show up each and every day, but when they do show up, they are very, very high probability. And you need to follow these rules step by step. If you don't get these entry criteria, if these are not met, then you want to move on to the next opportunity, because otherwise it's not going to be a high probability trade. Like, for instance, if we get a strong downtrend, if we get a strong uptrend followed by a strong downtrend, then more likely than not, price is not going to continue to the upside. So let's say this downtrend retraced all the way back down here. Then more likely than not, we're going to continue lower. We're not looking to get involved. This is why we have very strict rules on when we want to get in and when we want to get out. Some people like to trail their stop loss. You can go ahead to do that as well. We showed you exactly how to do that. So what I recommend you guys do is go ahead and take screenshots. Take a screenshot of this. This is how we want to go long in the market. And then you're going to want to take a screenshot of this. This is how we want to go short in the market. It's as simple as that. This is one of our favorite day trading strategies. Do you want to trade crypto professionally and do this as your main source of income? Well, then you need a community of like-minded traders who are absolutely dedicated to helping each other grow. With our premium membership, you gain access to our exclusive Trading Masterclass course where we teach you everything you need to know in order to become a consistently profitable pro. Not only that, you get alerts when we buy, alerts when we sell, live market updates, one-on-one mentoring sessions, and much more. Hit that link below to join the team today.